Think about this. In Weimar Germany, people watched their life savings become so worthless that a loaf of bread cost hundreds of billions of marks. In 1929 America, 9,000 banks went under, and investors saw 89% of their wealth just evaporate. Fast forward to Zimbabwe in 2008, the government printed a $100 trillion bill that couldn't even get you a bus ticket. You could be a literal trillionaire and still starve to death. Then, in 2013, a modern European nation, Cyprus, woke up to find its banks locked shut. To stop a total collapse, the government simply seized the savings of its own people. Anyone with over 100,000 euros saw a huge chunk of it vanish overnight to bail out the system. For 99% of people in those moments, everything they thought was safe, their savings, their pensions, their homes, it all went to zero, vaporized. Years of hard work gone in an instant. But a handful of people didn't just get by. They held on. Some even came out richer. They weren't just lucky. They understood a hidden truth about what money really is. They owned a specific group of assets that have proven, time and again, to be lifeboats in a financial hurricane. This is the story of those 5 assets, the assets that survive when everything else is wiped out. And what they reveal about the shaky foundation of the system we all depend on might just change how you think about your money forever. The nature of the collapse. Before we get to the assets, you need to understand the beast we're talking about. We tend to think of an economic collapse as a single event, like a stock market crash, but it's more like a disease that can attack the system in different ways. Sometimes it's a deflationary depression, like the 1930s. This is when money itself becomes scarce. Prices fall, companies go bust, and unemployment goes through the roof. In that world, cash is king because it buys more each day. If you have it, you can scoop up assets for pennies on the dollar. Other times you get a hyperinflationary collapse, like in Zimbabwe or Weimar Germany. That's the opposite problem. The government prints money like there's no tomorrow, destroying its value. Prices explode by the hour. A wheelbarrow full of cash might get you a loaf of bread in the morning and only half by the afternoon. In that world, holding cash is financial suicide. Then there are currency devaluations and banking failures like we've seen in Argentina, Lebanon, and Cyprus. This is really a crisis of trust. Your currency plunges against others, or the banks you trusted with your money suddenly lock their doors and use your savings to save themselves. And finally, you have stagflation, that toxic mix of a dead-in-the-water economy and soaring inflation, like in the 1970s. Prices are rising, but nobody's getting ahead. It's a brutal squeeze for everyone. Each crisis attacks a different part of the financial body. Stocks, bonds, real estate, savings, every one of them is vulnerable. The secret to survival isn't guessing which disaster is coming next, it's owning a portfolio of assets that together can weather all of them. The system's fragility isn't a bug, it's a recurring feature. Paper wealth gets wiped out, while real, tangible value lasts. So let's start with the one that sounds the most counterintuitive. Section 1. Cash and Treasury Bills. The Power of Optionality. It sounds crazy, right, to list cash as a survivor after we just talked about it becoming worthless wallpaper? But remember the different types of collapse. In the fire of hyperinflation, cash is kindling. But in the frozen wasteland of a deflationary depression, cash is the ultimate weapon. During the Great Depression, the U.S. stock market crashed by a staggering 89%. Real estate prices collapsed, businesses failed left and right, but the people who held on to cash or ultra-safe government debt like Treasury bills didn't just protect their wealth, they were handed the opportunity of a lifetime. Picture it. It's 1932. The market is at rock bottom. Panic is everywhere. People are forced to sell anything to survive. Because of deflation, the cash in your pocket is now incredibly powerful. You could walk onto a deserted Wall Street and buy stock in America's biggest companies for less than the cash they had in the bank. The legendary investor John Templeton famously did this, borrowing $10,000 to buy shares in over 100 companies for less than $1 each. He later sold them for a fortune. People with cash bought entire city blocks and factories for a fraction of what they were worth just a few years earlier. This is the power of optionality. Cash gives you the freedom to move. When everyone else is forced to sell, you have the option to buy. When credit freezes up, you have the liquidity to function. Even in less extreme times, cash and T-bills are a powerful anchor. During the stagflation of the 1970s and the sharp interest rate hikes of 2022, stocks and long-term bonds got hammered, but short-term T-bills adjusted their yields upward, protecting capital from the worst of inflation's bite. While a standard 60-40 portfolio might have dropped 20–30% in 2022, having T-bills in the mix made the losses much smaller. This isn't about getting rich off your savings account. It's about having the dry powder to act when a crisis puts everything on sale. Cash and T-bills are your ticket to that sale. They are the survivors of a deflationary storm. But what happens when the money itself is the problem? What do you own when the government prints its currency into oblivion? Section 2. Gold, the hyperinflation shield. This is the one most people think of when they hear economic collapse, and for good reason. For 5,000 years, through the fall of countless empires and the death of every single paper currency ever created, gold has remained the universal store of value. It's the ultimate insurance against government screw-ups. When a government gives in to the temptation of the printing press, it's diluting the value of every dollar, peso, or mark in existence. Gold is the exact opposite. It's real money that can't be created from thin air. Its value isn't based on a politician's promise. It's based on physics, scarcity, and thousands of years of human trust. Look at Zimbabwe. In November 2008, prices were doubling every 24 hours. The monthly inflation rate hit an estimated 79.6 billion%. You couldn't function. How do you buy food or fuel? People went back to the oldest forms of money. They used physical gold, not for some grand investment, but for day-to-day survival. Tiny flakes of gold could buy groceries. A small nugget could pay for a tank of gas. While paper wealth vanished, the purchasing power of gold held firm. The same story played out in Venezuela, where inflation topped 1,000,000%. If your wealth was in bolivars, you were wiped out. If you held gold, you weren't. And this isn't just for far-off places. During the 1970s stagflation in the U.S., faith in the dollar collapsed. After President Nixon severed the dollar's last link to gold in 1971, the price of gold exploded. It went from a fixed $35 an ounce to a peak of over $800, a more than 20-fold increase that shielded anyone who held it from the dollar's decline. Here's an uncomfortable truth for today. The very institutions that print money, the world's central banks, are buying physical gold at a breakneck pace. Countries like Poland, India, and Turkey have been adding hundreds of tons to their reserves. In fact, central banks bought over 1,000 metric tons of gold in 2022, 2023, and again in 2024, marking 3 straight years of massive purchases. Why? They're hedging their bets. They're diversifying away from the US dollar, which is a giant red flag about their trust in the paper systems they manage. For you, this means owning physical gold, like 1-ounce bullion coins or bars. For smaller, more practical transactions in a real breakdown, many people also use junk silver, pre-1965 US coins that contain 90% silver and are instantly recognizable. Gold thrives on chaos and hyperinflation, but it can go nowhere in times of stability or deflation. So, what asset protects against inflation and pays you an income? Section 3. Strategic real estate, the bedrock asset. Let's be clear. Your family home is not the asset we're talking about. We're talking about a specific kind of property, income-producing, strategic real estate. This is the bedrock that can give you both a safe place for your capital and a steady stream of cash, even when a currency is falling apart. The key is that in a crisis, People still need a place to live and do business. A well-chosen rental property can be an incredible survivor, especially during currency devaluations or banking crises. Look at the recent collapses in Lebanon and Argentina. Both saw their currencies lose over 90% of their value in a very short time. If your savings were in the local currency, they were gone. But if you owned an apartment building in Beirut or Buenos Aires, you had a huge advantage. You could adjust the rent. As the currency tanked, landlords could raise rents to keep pace, often demanding payment in a more stable currency like the US dollar. Your income from the property kept up with inflation, preserving your wealth. This isn't a new idea. Go all the way back to the Roman Empire. In 33 AD, a massive credit crisis, eerily similar to a modern banking failure, rocked Rome. As panic spread, what did the Roman elite hoard? Productive Italian land. When the value of everything else was in doubt, fertile land and property were the ultimate safe havens. The crisis got so bad that Emperor Tiberius had to step in with an ancient form of quantitative easing, but the lesson was clear. When the credit system breaks, real property lasts. Jump to the 2013 banking crisis in Cyprus. The government didn't just devalue the currency, it did a bail-in, seizing money directly from people's bank accounts. But they couldn't seize an apartment building. They couldn't bail in a piece of farmland. People who held their wealth in physical, income-producing property were safe from the bank failures. Their wealth was outside the digital system. The most resilient properties have a few things in common. They're often multi-unit rental buildings, which spreads out your risk. They are low maintenance, which is key when supply chains are a mess. And most importantly, they generate income that is linked to inflation. This asset class anchors your wealth in the real world, giving you cash flow that can adapt to almost anything. If this is opening your eyes to how fragile our financial world really is, take a second to subscribe. We're focused on giving you the clarity you need to protect yourself. Now, back to the assets that stand the test of time. Section 4. Essential Commodities, the Unshakable Demand. Gold is a monetary commodity. Its main job is to act like money. But there's another type of commodity whose value is tied to something even more basic: human need. We're talking about the raw materials of survival. Energy to heat our homes and run our industries, and agricultural products to feed everyone. These are essential commodities. Their demand doesn't really change. In a recession, you might delay buying a new car. You won't stop eating. You won't stop heating your home in the winter. This unshakable demand makes the assets that produce these things incredibly resilient. They really shine during stagflation or supply shocks. The 1970s are the textbook case. The OPEC oil embargo sent energy prices through the roof, fueling massive inflation. While the stock market went nowhere, oil and gas companies made a fortune. They were selling the very thing causing all the economic pain. We saw a new version of this with the supply chain chaos of 2020 and the energy crisis of 2022. While many companies struggled, those producing essential goods thrived. Uranium stocks, agricultural funds, and energy producers did incredibly well because they were selling things the world simply can't live without. This isn't just about modern times. During the Panic of 1893, one of the worst depressions in American history, financial assets like railroad bonds collapsed, but the economy didn't just stop. It was kept alive by the real output of farms and the energy from coal mines. Trade in real essential things kept going even when the financial system seized up. In Argentina, farmers have historically held on to their soybeans as a store of value, knowing the physical crop would hold its value better than the rapidly collapsing peso. For a modern investor, this doesn't mean you need to go buy a silo of wheat. You can get exposure through things like oil and gas royalty trusts, which pay you a slice of the revenue from working wells. You can invest in renewable energy infrastructure or ETFs that focus on agriculture. These assets are tied to the bedrock of the real economy. They give you a share in producing things essential to human life, making them one of the most durable assets you can own. Section 5. Rare collectibles, the store of cultural value. This last asset is maybe the most fascinating. Its value doesn't come from utility or cash flow, but from a powerful mix of beauty, history, and pure scarcity. We're talking about proven, rare collectibles. This is not about Beanie Babies or some modern fad. This is about items with a long, documented history of holding value. Things like rare gold coins, fine art by master painters, rare stamps, even historical artifacts. In the deepest crises, when faith in both government money and financial products is gone, people have turned to these culturally significant items as a concentrated, portable store of wealth. During the Weimar hyperinflation, people who owned rare stamps or first edition books could trade them for food and medicine when their cash was worthless. The same thing happened in Argentina and Zimbabwe. A single rare object could be a lifeline. Why? Because its value is recognized across borders and is totally disconnected from the fate of any single currency. A 1909 VDB Lincoln cent is rare and valuable in America, Europe, or Asia, no matter what the dollar or euro is doing. This asset class is also a hiding place from the formal financial system. During the Gilded Age panics in the US, when banks were failing, the wealth that industrialists held in their art collections was untouched. It was physical, it was private, and it was outside the collapsing system. The key words here are proven and rare. This isn't about guessing. The market for these items is sophisticated. Value is determined by clear criteria: authenticity, condition, ownership history, and scarcity. We're talking about owning a piece of history with a real auction record. Key date silver and gold coins, which are known to have low mintages, are a perfect example. Their value comes from both the metal itself and a much larger numismatic premium based on their rarity. Now, collectibles can get hit hard in a normal recession, but the ultra-rare top tier of the market plays by different rules. It's a global market of wealthy buyers who are often looking specifically to diversify into hard assets. Owning a rare collectible is like owning a portable piece of our shared culture. It is the ultimate long-term store of value, an asset that has survived not just economic collapses, but the collapse of entire civilizations. So there you have it. 5 assets, 5 different shields against 5 different kinds of financial storms. Cash and T-bills, your weapon in a deflationary crash, giving you the option to buy when there's blood in the streets. Gold, your shield against hyperinflation, the timeless money that protects you when a government destroys its own currency. Strategic real estate, your cash flow fortress, providing income that adjusts to inflation and stands outside a fragile banking system. Essential commodities, your stake in human survival, tying your wealth to the non-negotiable demand for food and energy. And rare collectibles, your portable store of cultural value, an asset of last resort whose worth comes from history and scarcity itself. The hidden truth here is that money, as we think of it, the numbers in a bank account, the value of our stocks, is a bit of an illusion. It's a system of promises, and throughout history, those promises have been broken over and over again. True wealth isn't a digital number. It's control over tangible things, things that are useful, things that are scarce, and things that are desired, completely separate from any financial system or government. A collapse isn't a matter of if, it's a matter of which kind is coming. Are we headed for deflation, inflation, or a banking crisis? The honest answer is nobody knows. Owning a piece of each of these 5 asset classes isn't about predicting the future. It's about acknowledging that history repeats itself. It's about building an ark before the rain starts. By diversifying across these time-tested survivors, you aren't just protecting yourself against one type of failure. You're building a foundation of real wealth designed to endure no matter what happens next. If you want to keep digging into how money really works, click the video on your screen right now. We've got more deep dives into financial history and strategies to secure your future. Thanks for watching.